So we saw a nice break of the neckline here on QQQ today. You can see this head and shoulders pattern that we've been trading within now since last Friday. We made the head over here on Monday of this week and then had follow through a bit further down. I did mention I was looking for some form of a pullback after last week's technical breakout that we saw over here on not only SPX, because you can see we did go above not only this white line, but also the ascending pattern that I was sharing with you guys before. So we broke above that, and so far based on QQQ and SPX, we are experiencing some pullback. We'll probably have some residue into tomorrow especially. However, notice I use the term pullback on this because of the breakout we saw, and especially because now IWM, so the Russell Index as well as the Dow, are starting to join the party in a sense. This is likely some form of a pullback before having at least a decent sized bounce. We'll see after that bounce if it does want to make a new high above the high we made here on Monday or not, at least for the QQQ. As of now, it seems that tech is the most weak in comparison to everything else in the market, which is a shift from it being the strongest now for like a couple months. However, something I do want to note over here, we do have my 37-day cycle, as you can see in the blue lines, and this has so far played out perfectly. So we had that range over here between Friday and Monday for that high to print, and as of Monday was the high of the move so far, because today did not go above. It almost did, but it was unable to wick above. So this is still the high of this move. So we should see some more downside. Again, I'm only expecting this to be a pullback before some form of a tactical bounce can happen, likely around this white line here. So a retest of it, that'd be around 4,240 to 4,250. So that's something that I'm looking for before some form of a minor tradable bounce. And that actually converges with the previous ascending pattern that's around 424-ish mid for SPY. So that'd be very ideal to see some form of a pullback to that range before it decides if it wants to bounce from there or not. At least the risk reward is favorable in that sense. But going over here to this SPX chart, we do see as of this week, we formed a double top on the 15-minute chart. Actually, two of them. We of course have the one up here that you can see highlighted in purple, and then this mini one over here intraday. And right now we're at the lower end of it. It's still possible, especially with SPX and how much strength we've seen recently in the market, still possible that the bulls could gap up out of this. They need a pretty sizable gap up tomorrow, Friday at the latest, in order to get out of this, and they have to see continuation from that gap up. For example, if they wanted to gap it up to 4275 to 4280, you'd also have to see continuation back up to surpass where this previous double top was, which is roughly around 4,287-ish, around this area. You need to see a clean break of that to know that we'd form a triple top, which of course you'd likely see a breakout from that. So that would have to be the case in the next 2 days. Otherwise, as of now, this is teetering on the edge of a cliff before falling down a lot lower. Again, remember my target here would be around that 4,240 to 4,250 range. That would be ideal before some form of a minor relief bounce from there. So tomorrow's gap's going to be very important, especially if we were to gap down sizably. That would likely set the trend for the day before we enter this supportive level around that range I just referenced. So just something to note there. Also something to note is Apple on this chart. I've referenced this in previous videos, and actually this chart specifically for a long time on this channel, which if you are new here, do subscribe below. We do these videos every single Wednesday as well as Sunday. And what's interesting about this channel, not your typical channel, because of course we did have a breakout over here and then we also broke down below. However, this blue line over here, as well as this blue line, of course we know this is the resistance as well as the support. We've been trading within this now since around September of 2020. Again, we did have a breakout above, so it's not like a perfect channel that we've been trading within only between 2020 and right now in 2023. However, this has been respected numerous times. We saw a rejection over here, saw another rejection over here, and you could see each time it was tested, it acted as a support / resistance, depending on the direction we traded into it. So because of that, you can see right now we're actually testing it on the daily chart. And if you look over here to the 50-minute chart, what's actually interesting is not only did we close on it like literally to the exact mark for the most part today, we've also seen numerous supportive bounces as well as hard resistances off of this level, even within the 50-minute chart in 2023. And this is something that you can source all the way back to September of 2020. So you can see over here, we had a hard rejection off of this level. I haven't changed it. This is the same blue trend line. Over here, we gapped up and we actually opened the day exactly on this level. It acted as a support support as well for the entire day, and even acted as support the following day when we did retest it over here. You can see along the past couple of weeks especially, it's been a support numerous times, and we are now testing it again. It looks a little bit more weak this time, especially after the sell the news event from their overall presentation they did earlier this week. So watch Apple going forward, especially because we are right on the edge of this trend line. If we did see a decisive break below this, there would be a lot more downside. The first target would end up being around this 175 mid level for the gap fill. If a gap fill happened and we saw a daily close confirm weakness by closing below the previous gap fill, then after that we'd see 171 again to retest that strong support. We know that's acted as a support numerous times over here. That 171 level right around this range, we bounced over here off 171, over here, and we also gapped up on May 5th right on that 171 level as well. So that's held for a while. So something to pay attention to in the future. Right now, this shows a lot of weakness, this sell the news event from over here. So we could see a bounce off this again, but it would probably be minor just because of how hard of a sell we saw. So it seems to me that this will end up being some form of a breakdown. Whether it happens tomorrow or next week, the following, we'll have to see. So continue watching this trend line, especially on Apple, because of course Apple is the largest holding in both the S&P 500 as well as the NASDAQ. So that will have implications on the rest of the market, especially because big tech has just been carrying the market all year. If you take out the top 7 stocks in the market right now, the S&P 500 would only be up 1% year to date, which is just incredible to think about. So of course, if this starts to fall in terms of Apple, then we will see some more weakness in the rest of the market. So continue to watch this and do mark this line on your chart. Also, we need to talk about the VIX. You can see this has just been absolutely decimated recently, as well as for the past like 6 to 8 months or so, all the way back since this October time period, if you want to go back that far. But as of recent, at least within the last 2 or so weeks, we've seen a major smackdown in terms of volatility, going all the way from around this 19/20-ish level, all the way down here to the 13s as of today, which is just incredible. The last time we were in the 13s was right before the crash in 2020. Like, look at this here. We already are below all of this from over here, which is during that huge QE period where we saw new highs in the market basically like every single week, every other week. But now we are all the way down into the 13s, which again was all the way during this time period here of February in 2020. So pretty incredible overall that volatility has been reduced by this much. It's just been suppressed a ton. And even if somebody looks at this and believes that it is a form of bullish nature, at least for price action in the rest of the market, you have to be so careful because of how far volatility is down. There's just not as much reward if you are long to go for a new bull market as some people claim. I personally am not in that camp by any means. However, for people that claim that it's a new bull market because everything is going well in terms of price action to the upside in the market, as well as volatility falling by so much, that's not necessarily the case here, because you just have a lot of risk with volatility being this low, yet we're only about at that 4,250 to 4,300 range compared to the last time that we had this here was around the all-time high prior to that 2020 crash. Similarly, around this area here of 2021, around this 14-ish price, we also were at that all-time high around the 4,700 to 4,800 range before we started this bear market. So we're all the way back into the 13s now. Very incredible that we're here. And as I mentioned in the Sunday video, we saw a ton of premium hit the tape in terms of out the money VIX calls based on Friday specifically of last week. So that was June 2nd. And all of this here I'm just referencing in the historical flow tab. So June 2nd. And I also filtered for above 500,000 in premium to see what the whales were doing. We'll see if this is still valid. Remember, it doesn't have to happen overnight where a large move occurs in the VIX. However, they're most likely betting on something happening, at least a move up into the low 20s by the end of June, just based on the expirations they chose, because we have a lot of July, August, and then some September expirations. So they would like to see a move within the next few weeks or so, and that at least is what they're either hedging for or taking a directional bet on. So we'll see if that takes place. Again, pretty incredible how far we've fallen in terms of volatility as of recently. And we are well below this yellow trend line, which goes all the way back over to here in 2017. You can see that ever since 2017, this trend line has been respected every single time. We were able to bounce off of it until recently where we broke decisively below it. So we'll see what happens from there in terms of overall confirmation for further downside. Let's say for a large extent, we're talking multi-hundred points to the downside. Obviously, I don't mean that all at once. However, in terms of a down leg, we would need to get back above this 17.60 level. So mark that on your your charts because this is a convergence of my 17.6 pivot level as well as this yellow trend line. So that's going to be key in the future if we want to see that down leg that I believe will happen at some point. Clearly was wrong with the timing here of it happening by early summer. But if that does happen in the future, let's say into that fall time period, you're going to want to see this get broken to the upside decisively, especially on a weekly candle now that we're really far below, because that would be confirmation of more volatility to come. So I suggest you mark this on your chart, at least both of these levels, so you can reference that in the future. And last thing for today's video, I'll do a quick dark pool update for you guys based on levels. We've still been seeing a ton of prints every single day. That hasn't stopped. No shortage in premium lately. And again, I reference it in every video, but it is a very big deal how much premium we've been seeing because it's very rare to see that much. We just don't typically have that much premium every single day consistently within a pretty tight range. So we saw 3 billion in premium at the 428.09 level. Fairly high up, especially because of this breakout that we've seen so far, at least based on technicals. So that's 3 billion. Again, anything 3 billion and over, you're looking at something that is definitely meaningful. We saw a couple of those 5 billion plus orders. That's very rare to see in itself, but over 3 billion, definitely something you want to be aware of, especially if we see a lot of the prints around this level. Because again, super unlikely, and I know I said it before, but super unlikely, especially up here, that they are buying that amount of shares. Seems more so that they would be offloading, and by they I mean large institutions that have access to these dark pool exchanges, because all the way back here during this period, which I still believe is some form of distribution, I believe that there was a lot of sell pressure around the 417 to 420 range. We broke out of that range. However, there's still potential we could fall back within it. Up to the market to decide. I doubt that would be the case before this OPEX that's approaching, at least this quarterly one. But afterwards, if there is a nice window of weakness, there could be a potential there for bears to get under. We'll have to see. But I just find it exceptionally unlikely now that we've broken out of the range that this 428-ish range, providing us numerous billions of premium, is buying. I just find that very unlikely. So 3 billion at the 428.09 was from today. Based on Tuesday over here, we had probably the lowest print in a very long time, only 637 million. So not much there. That was at the 427 level. And then if you go back over here to Monday, you can see that we had 3.3 billion. So again, over 3 billion, and we're right around that 428 level. So 428 is collecting a lot of premium. That's an area you want to watch going forward, especially if bulls are not able to hold above and we see rejection, because that would most definitely be a form of selling. And then if you are a bull, you're going to want to see this 420-ish range. When we retest it, you're going to want to see that be able to hold, because otherwise that would make this a very large fake breakout with a lot of downside under it. So we'll look for that pullback to my desired range for the rest of the week here going into next week. See what happens around in terms of price action, if there's going to be a bounce and to what extent we'll bounce from there. And I will update you all accordingly in the next video on Sunday. But other than that, appreciate you guys watching this video. I'll see you guys next time.